following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome to the show. It's Friday night here in Asia, Friday morning in the States. Had a little bit of volatility in the S&Ps yesterday. We're going to talk about that. But first, we're going to talk about this dollar. And I want to show you, again, we stated that 95.46 area, weekly unfair lows. There we go. This is Friday. If we get a close below there, it's going to be first technical damage on the dollar since the 80 area. And that meant going to 120 points up without any long-term technical damage. But I want to show you something that happened. This is our 40-minute view, or excuse me, 240-minute view. Here's where we kind of broke down initially. I'm just going to show you this in 4-hour segments. Lows are 94.47 on those lows. So we overshot those weekly unfair lows. We talked about the possibility of picking a battle there. Then we talked about a stop below. And then we talked about we may retrace back up into that area, former support, now resistance, especially if we get a weekly close below. So what do we do on the retracement back up on the next 4-hour segment? We went right back up into 95.50. Now that's 3 cents, or however you want to look at it, the pricing of the dollar, within the break below and go back and retrace and touch that weekly inflection point. Remember, weeklies are, weeklies take preference and prevalence over the dailies, 240s, 60s on down the line. So you kind of look at, if you just joining the show for the first time, you've got to look at those longer term time frames, which obviously trump most of the other time frames going down. So right now, kind of trading below 240s on the dollar. Here's the daily situation. We're definitely looking heavy there. So I'm not a huge fan of shorting the dollar. So I'm going to just kind of sit tight here and see where we have a weekly close, and then we can have our bearings a little bit, more solid with deeper conviction about what might be able to be looked at next week. And I hate to just kind of, sometimes we have to sit tight. I say that probably more than often. Not being in the market all the time is not a bad thing, and we want to always try to figure out where the high probability trading opportunities are. And right now, the short side is definitely in play, and we've broken some technical situations here, but we've come a long way down pretty quickly. And, we could kind of have a rubber band snapback situation at any moment. So I'd like to see that weekly close to solidify that the crowd really has decided that we are going to have some technical damage, and then we'll deal with it after that. So let's take a look at the euro. We've kind of pointed out the high probability area on this situation being the 110.5 into, excuse me, I've got the wrong chart up here. How did that happen? Let me save this page. Okay. We talked about that 110.5 area on the daily, and then that weekly unfair low around 111. And that was obviously hit right around and just shot through it. So, again, we're kind of looking at a weekly close here in the middle of the fair auction, if this is going to be the case by the end of the day. And we could traverse actually up into that 115, 33, 34 area. Now, what we had decided to do, again, if you're just joining the show this week, we had looking at getting back on the short bandwagon below 107. That never happened. And then we said, you know what, the leverage point above, instead of trading the breakout down below, was the 110.5, 111 area, weekly unfair lows and daily unfair highs. Well, that obviously broke also, and then we closed above on the daily. I just want to point this out. Closed above on the daily, came back and retested. Very similar to the dollar action on weekly unfair lows. So, again, these inflection points, we try to pick a battle on the short side, and that DMZ, I got stopped out. Now we've got to just kind of take it for what it's worth. And the possibility of it traversing the entire fair auction on the weekly is a real possibility, and you've always got to kind of keep that in mind. These things, I'm very fundamentally bearish on the euro in general, but again, we're still in a long-term trend down, and we haven't broken technically like the dollar has. You just kind of step back and look at that from 135.5. A little bit of technical damage now, but having a close above 115 and some change will be really a game changer for the euro. So keep that on your radar screen. We're going to take a look at the pound because we had a little bit of action here on the pound today. They had much weaker economic numbers than they had expected. I want to show you the weekly here. Look how that acted. So we're going to kind of go through the same rope process here. Wasn't a lot to deal with when we broke up to hang on to above this 150 general area neighborhood. Then we were kind of drifting around, no inflection points. The weekly within the fair auction, bouncing around in here. Then we got to that maximum leverage point again today. Economic report came out, boom, pulled off of it. So that unfair high 154.46 held, and we dropped about 200 pips from there. So, what do you do now? This is the 240 on the British pound. The breakdown has happened. The short-term traders now have a leverage point for retracements up into 153.24 for a chance to get short this. We're on the lookout for new daily profiles that might appear. This is a pretty big pullback, and we may have some new inflection points that start to appear. They're not appearing today. We don't have any orange bars. So that's the situation on the pound. We're going to take a look at the Canadian dollar really quick. This is something that I've been kind of playing around with myself. Here's the weekly. We talk about weekly closes all the time. Looks like we're kind of getting back above this leverage point that we used before on the bounce, 120.58.59. Kind of getting back above there. This to me, believe it or not, this to me looks like it might be a good long opportunity. And you've got that 120.59 now to leverage off of and place stops below. We always talk about where's the risk? Where do we put the stops? That's the first thing that comes to my mind, and that's what's coming to my mind right now looking at the Canadian dollar. All right, so cover some currencies that we usually look at. Gold, man, we got out of our automated trade up in the 1215 general neighborhood, thank God. Look at this. I want you to look at this. This is where our automated system went long, right? Got a little bit of a kind of a confirmation to get up out of that 1182 area. I think we entered that trade around 1186, but we started taking some off a little bit along the way, and then all of it off around the 1215 area. Look how that acted. Put a gun to my head. I actually thought it was going to go higher because, dollar getting weaker, gold might drift higher. This is pretty damning for gold in general right now. But 1182, 1183 now is that situation that we got to pay attention to. We kind of traversed below, went back up into it. Now we're drifting lower, 1177 real-time pricing as of the time of this report. And if you look at the 240s, if you're short-term trader, this is how do you trade this? This is a very difficult chart to look at. As far as how do you figure out the trend? How do you figure out the momentum? Just a key reversal right off that daily unfair high at 1215, and we reached a high of 1214.9. So it's amazing how those inflection points are relatively true most of the time, actually. And as we're looking at this breakdown now, a daily close below 1182 is just gonna, I don't know any term to use other than it would suck for longs. And I'm actually a long gold person right now, but I got to look at the writing on the wall right now and say that, you don't have a lot to hang on to down here. And what you want to do for gold now, we came all the way down, and last week we, kind of weathered a little bit of a storm, reached a low of 1174 right in that DMZ, the 1182, 1171 DMZ, but we're right back down in here, and the dollar's gotten weaker, and man, that just doesn't look that attractive yet to try to get long gold again. And we're just kind of, I'm not a big fan of going short gold, but it's on the intermediate and and possibly the long term. I mean, we if we have a weekly close below 1171, we could hear a whoosh sound for a while, because quite a few folks will have to start covering those longs, and that would not be good. We may have some volatility and some more downside movement, and then we'd have to start looking for some more inflection points to look at. And again, getting a weekly close back above 1171 would kind of, on a long-term basis, allow me to kind of mentally get my toe back in the water on the long side. But, it's just not this type of action that's kind of coming right back down to our balance point is not, I don't know how many more times I can say that. I'm sorry. It's just not looking that attractive. Let's take a look at silver. Silver was kind of, on a short-term kind of situation here. We were looking a little bit more relatively strong. That's still the case. Gold's obviously kind of back down to its near-term lows. Silver right in the middle of the fair auction, holding up relatively well. And silver and gold, really, it's just amazing how both of these products reached those weekly unfair lows last week. We talked about that. We just hope we gravitate together down to those areas. That happened, and had a nice little bounce there. But the high this week, what is that? I can't see. 1670. We talked about targets at 1660. Not bad, but we're kind of right back down in here. I think you got to look at silver from a long-term basis with stops below 1559 now. Again, looks a little more attractive from the long side than gold. And by the way, it's really cool that you got a daily unfair low in that same neighborhood as that 1559. You got 1564, so you're 5 cents DMZ on the silver possible bounce point there, and stops down below. Day trading, I'm not a day trader of silver, and I don't know if you guys even want to hear about that angle. The thing that's really on my radar screen right now, we've been looking at corn, we've been looking at soybeans. With the dollar getting just submerged here, corn is really showing its hand here. I mean, we talked about 383, another more breakouts below there. This is our daily on December corn. This is something not looking good, especially with the dollar getting devalued here. Corn by default should be going up, and we talked about corn possibly going into 350 a bushel area. I still think that's possible. So keep your eye on corn for a decent short. It's kind of showing itself right now, and it's interesting how you get to get those freebies by getting a free look sometimes with the devaluation of the dollar. We'll be right back, folks.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Took a look at corn, showed its hand a little bit, talked about that. Beans, similar situation. I'm a big fan of shorting those things. But as we look at November beans, the new crop, let's just go back to that for just a second here. You know, what do you do with it? I mean, there's not a lot to hang on to here. We're just kind of drifting around in the weekly and the daily fair auctions. The 240s, we're sitting right on the precipice of a kind of a near-term bottom here, and this unfair low in the 240s at around 950, 50 and a half. You can play that breakout. I like the way this thing sold off yesterday and then consolidated. I love that. I love the no bounce here on the big move down. That's usually, from a classical technical analysis standpoint, usually a little bit of a continuation pattern, putting the probability gun to my head. But the targets down below still are 942 and a half. And I just, you know, again, my thoughts on beans are 850 and possibly even lower a bushel in the long term. So just kind of keep that on the radar screen. If you're going to trade long-term breakouts, you would obviously want to, you know, key in on 973 and breakdowns below 942 and a half to get really maximum confirmation on that type of trade. So let's take a look at crude oil. This is, you know, man, you know, what can you say? I mean, the profile's just called it all the way on this one. Let's just take a look at the weeklies. Boom, that consolidation above that, above that 56.14. And then we started, you know, around 50 is when we really started getting confirmations with the news we talked about last month, all the, you know, the bearish, you know, we started talking about hedge funds being mega short on the lows, of course. And then we started talking about really getting some legs above 50 and being able to explore this fair auction, the consolidation above. And now got a nice little move here. We talked about 60 being a target, and guess what? That's what we've reached today, 59.90. All right. So as we started that 50 area, we started gathering ourselves and getting momentum above the dailies, the intermediate, right? Close above, consolidate, getting legs, getting through that weekly unfair low, boom. And then we just, there's no way to trade this from the short side. Zero reasons. We talked about that since 50. Got the confirmations to get back in the water for the first time on the long side since 100. All right. So we had, this has been on the radar screen. So now what do? Believe it or not, you got support on the long side still now at 58.82. All right. The dollar, I actually, not been a bad thing for this product to go up. But let's take a look at the XLE. We've, constantly talked about the relative strength trade with the XLE. And, yesterday had a little bit of a pullback. XLE, more than likely, we talked about putting stops below 80. That was a weekly number and a daily number just to be safe. But look, this thing has really been the easier product to trade. I know we've had up days and down days and, things shifting around. But the fact of the matter is this has been a very, very simple situation since 74.16. Why? The weekly unfair low, 74.18, excuse me. We started looking at this from the long side because remember, crude oil was making lower lows, and this thing was kind of hanging in there. And that was the leverage point we were trying to pay attention to. We reached some targets, came back, put on the trade again. And now the XLE is actually looking stronger than crude oil above weekly unfair highs. So, let the trade tell you, let the trend tell you that it may be technically damaged on the downside. If you just start taking off crude oil at 54.55, you missed another $5 a barrel, which this is a great example of, let a trade breathe, let the profiles regulate the thing up. Here's the 240s on the XLE. Look at this. Have we had any technical damage even on the short term on this? No. The answer is no. Check it out. There's that 74 area. It's black and white. That's what you ultimately want to reduce trading down to, in my opinion, is okay to be short, not okay to be long. Okay to be long, not okay to be short. And these profiles, I've been doing this a long time, and this just makes it super simple to me. Maybe I'm getting old. Maybe I need more simple, but these profiles are just, a great standalone system, but also a great enhancement. Steve Rhodes does a lot of cool things on his show, and so does Tom. That's, every host has got great information. But Steve uses our profiles in particular as kind of an enhancement to what he usually does. And I think he gets a lot more mileage out of what he usually does using these profiles, which are in the scanner. So we're going to be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. I'm going to pull up our scanner really quick. I'm going to just kind of show you if you just joined us for the first time in a while. This is a product release. Hopefully we'll get with TFNN by Monday. I know I've been saying that, just a little bit of coordination issues there. We pretty much made heat maps with the indices that we cover for that we're doing breadths on. Actually, Michael, we've got FTSE and DAX and Saudi Arabia, believe it or not, going in today, I believe. So for what that's worth. But as you look at this heat map, you can sort them on weekly, daily, 4-hour, and 1-hour breadths. So as we look at the 4-hour, you know, we start seeing some global indices starting to pull back here, and let's go to our daily, and let's just go into the S&P 500 as we see that the breadth has changed to negative. And this is what we were talking about. We're going to go into the S&Ps in just a second, but we were religiously harping on the concept that taking these longs above that 2068, 2070 area, that was a risky move in our opinion, because we had kind of a disconnect going on with the components of this particular index. And if there's no clear sign and you don't have kind of the troops on the border marching in the same line, that's no edge. So, you know, was the risk to get long above profiles at that point? In our opinion, yes. Have you had some chances to go short lately on the short term and the intermediate? Yes. Are we probably going to have some new inflection points to pay attention to now and leverage off of? Absolutely. So as we drill down into this, and we can still access our breadth charts, you can see how these things have acted. You can blow these up and you can look at the percentages. The market's not open yet today. So, you know, since this is based on the components of the S&P 500, we're going to have to wait for some openings to get some true numbers for today. But as we look at this, I want to go back into the ETFs. We put these in here in a heat map. So you can see this is our intermediate, this is our weekly. So we're starting to see some ETFs roll over, which started happening. We were looking at the dog of the ETF world relative to daily profiles. And, this is the one that was just constantly on the radar screen, consumer staples. And you got your breaths up there. But let's take a look at the one that was really hanging in there constantly without question. And it's not take a brain surgeon to understand that some oil stocks have been benefiting from this latest run up in oil. But as you drill down into this ETF, I'm going to go back and just show you once again. I've got daily and weekly ETF. Here's our 4-hour. We got materials and energy still hanging in there on our 4-hour, but on our daily, these are still the kind of the stars of the ETF world on the long side. So as we look at the XLE, drill down to the components, we can actually start looking at Murphy Oil laggard relative to profiles. In fact, I got just 1, 2, 3, 4. There are 4 stocks in the XLE basket that are trading below profiles on the daily. Now, if you're looking for trading opportunities, let's just say that crude oil may get back down below that 59 area on the daily and for highs, and you're looking for weak stocks to try to take advantage of a possible turn in crude oil, which again hasn't been confirmed whatsoever. I'm just saying what if right now. Murphy Oil. Let's take a look at where it's at. Let's pull up our landscape view. This is the price. These are the latest profiles. All right. We actually got a new box attempting to appear on Murphy Oil, but I would ignore that because this takes precedence over anything going on there. But let's take a look at Phillips 66, PSX. Let's take a look at Valero, VLO, and that's it. Marathon Petroleum Corporation, so MPC. So let's do this. Let's kind of explore the XLE dogs, if you will, on an intermediate time frame. MPC. ExxonMobil, by the way, I heard Kramer yapping about this. Let's just look at this technically. And the guy's traditionally wrong. Gets people into some trouble too. I mean, we've talked about that. But anyway, I think he's been tooting his horn about ExxonMobil. Well, we talked about staying away from ExxonMobil because it was, kind of lower highs, migrating back down to these weekly unfair lows, while crude oil is actually starting to get some legs in it. And the XLE in general, talking about relative strength trading, you can't ask for anything better than this. XLE getting legs to it, crude oil getting legs to it, ExxonMobil looking like hell. Then the weekly close below, and we're just doing a sympathy trade right now, bouncing up into possibly an inflection point to get short again on a stock that has shown its hand again to be weak. Now, if you're looking at this, you're going, well, Logan is kind of like, bouncing around daily on fair highs. I mean, doesn't this kind of action, classical technical analysis with classical technical analysis, we spike up, we kind of consolidate. But stepping back and looking at the picture, how much has crude oil rallied while ExxonMobil hasn't gotten out of its own way since April? This is what you call a relative strength trading short opportunity. If crude oil pulls back, the bottom may fall out of this thing. So that's the situation on ExxonMobil. But let's go into some of the components. Marathon Petroleum Corp, MPC. That's why you have the scanner, is to pick these things out for you. Okay, MPC obviously had a bad day. And as we look at this, now we're getting below daily unfair lows here. So if we, with this type of action and with the action that may happen on crude oil, may not, crude oil might go to 70, but you want to find stocks to take advantage of on the short side, and that may be an easier play in general than going out and just trying to be the hero that shorts crude oil, hoping it'll come down. If crude oil comes down, MPC should fall. If crude oil keeps going up, MPC should tread water. That's the theory here. And that means you don't get hurt. So let's take a look at Murphy Oil Corp. This has been on my radar screen for a while, MUR. And this will kind of tell you why it's been on my radar screen. This has just been an ugly situation on a relative strength trading standpoint. this is one that you have a good night's sleep when you're in this on the short side, especially looking at crude oil after it's done what it's done. Anything can happen, but this is our daily situation, and now proving itself, just getting no benefit to crude oil bouncing, and this is something that you really need to pay attention to. Let's take a look at something else we talked about on the radar screen. These are 4 stocks only that are trading below profiles in the XLE. Let's look at Phillips 66, PSX. Just going to pull this up. PSX, boom. All right, so here we go. Breaking down a little bit. This hasn't been terribly weak. So as I look at this, I'm just going to plainly state that I think even though we trade below profiles here on the daily, you've probably got better candidates here on the short side, namely the ones we just spoke of. And this one, kind of stepping back and looking at it from a 30,000-foot view is this is kind of a pullback off recent all-time high or recent highs, and I think you've got better candidates. So that one is the one that you might not want to just pile into and say, hey, this is one showing itself. So let's take a look at Valero. VLO, this is the last and only thing we can talk about from this standpoint in the XLE. All right, so here's the weekly on Valero. Hasn't participated lately. Big time supports at 49.29 into 49.68. So you got a DMZ down there. Again, if you're looking for crude oil to pull back, you're thinking crude oil may have gone too fast, too far, too fast. Is that the way you say that? Okay. Our intermediate daily time frame, giving you a little bit of an inflection point to pay attention to here around 57.17. So that's your leverage point on the short side. I think this thing could go much lower, especially if we have some help from crude oil. But the good news is, again, just like the trade on a couple of the instruments that we talked about initially, the theory is crude oil keeps going higher. This one may not even get out of its own way, may drift a little bit higher, but the pain will be a lot less than trying to short crude oil. And again, there's no reason to short crude oil right now. But if crude oil does turn around, which anything can happen, you want to try to get a freebie. Hope some of that made sense. Anyway, no comment. All right, so as we go into the indices, we're just going to pull this up and we're just going to go right into the S&Ps. And I'm on my daily, showing my breath there, and I can come in here and it's just so much easier to use. Drilling down into it, we do some sorts. Let's just look at our figures on our daily. Those are our statistics. If you have this, you can read it. Almost 50%, almost 50% of the stocks in the S&P now are trading below intermediate daily profiles here. So what we're going to do initially is we're going to look at the S&Ps just to kind of get the index view here. And this is kind of cool what I'm getting ready to show you. Considering that we were not a big fan of going long the S&Ps and this, kind of ether drift up move with the breath all screwed up and just kind of following suit with some global indices and being the laggard, it's not the best use of your capital. But look what happened yesterday. Like, as we talked about the 240s, and I'm going to pull this up, getting below the 290, 292 area, that was the trading sell-off opportunity that you could hear a whoosh sound, everybody having to cover and racing for those. And this low point yesterday was 2070. All right. Now, long-term weekly breath still positive, long-term trend up. And as we get into these intermediate inflection points, they are a bounce point. I mean, they are kind of a default. We've had enough. We've come down off 2120. And we've done this in a week. And we're back down to 2070. So that inflection point is 2069 rounded off. So look, we came down there and hit it to the tick. That was your target after that 2090-92 area we talked about. And Steve Rhodes was actually, saying, is there any support here, blah, 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 yesterday looking at the 120s. And we specifically said there might be. And there was a little bit of a support there, and there was about a 7 or 8 point bounce, and that was a great call by Steve. But as we talked about, like, on the kind of time frame that we're looking at, maybe we want to pass on those and just wait for a breakdown to happen, because the breadth is just really, I mean, Steve was right. We were kind of right. It's nice how that worked out. But as we look at this now, what do you do with it? You got down to that 2070 neighborhood, and we're all about what do we do today? So right now, there's not a lot of direction in this. I'm not a big fan of this thing bouncing and going back into the recent highs. So caught a good short, got a good bounce point, and right now you're probably going to start having some technical damage with 2080. So I would wait for that. We've got a trading range right now between 2080 and 2090, 92. That's going to be kind of the short-term day traders type range that you're going to pay attention to today. But any breakdowns below 28 are going to have to be paid attention to, because we might race and do a little bit of a kind of a double bottom little situation over the next day or two back down in 2069, 2070. That being said, let's move into the S&P 500 on the scanner. Let's do a little sort here. Let's go below the box. And there's just, without question, there's almost 250 stocks below the box on the daily. So what we're going to look at is we're going to look at some of the usual suspects using that relative strength trading process that we talk about. Me and Tom talk about this. This is the way you trade a listed book, a New York listed stock book. The specialist trades this way. There's a lot of good background historical probabilities doing the relative strength trading game, stocks versus the index, stocks versus the sector. But let's take a look at some of the ones we had on our radar screen. WHR, Whirlpool, WHR. We looked at Weyerhaeuser. We had Walmart on our radar screen. We're going to take a look at that one. We looked at UPS. So let's take a look at UPS and how they acted. And UPS obviously didn't act exactly how we wanted it to, but that's what stops are for. So we had some earnings situation come out on this one. This is, we talked about not staying in trades during earnings. So UPS kind of, did its move, and then that orange bar right before earnings, that kind of also gave us an indication there. But let's take a look at Weyerhaeuser. We're not only going to show you the ones that work out, folks. We're going to show you the ones that didn't work out. But we were not in that on our type of trading plan right before earnings. Weyerhaeuser, this is one that's been on the notorious short list, and we got a rally back up into those daily inflection points, 32.25, and again, we're looking sick, and this is all relative to the S&Ps coming back, and this is the kind of game you want to play on the relative strength side. We're going to come back in just a second and look at a couple of stocks that were on the short radar screen. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. I'm going to take a look at a couple of stocks people asked me to look at. GDX, Market Vectors, Gold Miners. Pre-market looks like 1994, but let's take a look at the weekly. 1954 is going to be big support on this, and we poked our head up. I mean, this is something technically, gold obviously could drag this down a little bit, but right now that's where I'm putting stops down below. I still like it to some degree as a long. Then you got 1932 to 1954 is a little bit of a DMZ to kind of just look at this as support for this particular ETF. Now, you're gonna have to pay serious attention to that 1171 area on gold right now. There are going to be some mass exodus of longs below there if that happens, especially if we get a weekly close, because it might not stop Monday, Tuesday, Wednesday. I mean, we could have a pretty big washout. I mean, this is, again, not the type of action you want to see in gold when we make that 1215 target and then we just come back down below where we started. It's just, it's a little ugly. Keep that in mind. Let's take a look at AEM. If you guys want the best kimchi in the world, come to this town in the Philippines. It's just awesome. Anyway, AEM, here we go. Here's the daily. Above profiles here. Orange bar appearing yesterday. Pre-market, it looks like we're trading around 30.20, somewhere in there. We're trading 30.30. This is close. So, again, we might have a new profile appearing on this. Here's the weekly. I think stops just, long-term stops have to be below 28.22. That's really the only thing I can say for that one. SLW. Man, these are some wild-looking charts here. Oof. This is the good news on this one. And we're trading 1958 is the time of this report. The good news on this one is you've got 1924 on the weekly. And we're always talking about looking at the downside risk first. 1924 on the weekly. And I'm also going to point something else out on this. Let me drill to the daily before I say that. You've got some help here with Navigator. You've got 1941 as an unfair low on Silver Wheaton Corp on the daily, and you've got 1924 on the weekly. So keeping in mind, where's the downside risk? On a long-term basis, stops below there. I know we just rallied above, almost to 21. But if you're trying to hold this, I think you could probably put stops below that 1920. Let me just see here. 1924 area based on your appetite for risk. Give yourself a little bit of noise, just like you had to give yourself a little bit of noise recently in the last month or so. But again, I'm not familiar with this particular stock, and I'm just kind of trying to do some instant analysis for somebody in the den right now. It looks relatively thin, and it's probably not a day trading stock. That being said, let's take a look at the NASDAQ really quick. I wanted to show you this because, we have actually, for the first time in a while, just gotten back down below 44.37. That was going to be the kind of the maximum buy point, along with 44.62. But now the next leg down could be 43.70. NASDAQ's obviously been a lot stronger than the S&Ps. And I think the S&Ps are more than likely a lot better short if you're looking to get some shorts off right now. Guys, you've been great. It's Friday night here in the Philippines. I'll probably be signing off. Hope you have a great day trading.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 28th and May 5th that only subscribers to his opening call will gain access to. On April 28th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's opening call newsletter today on the front page of TFNN.com.
This is TFNN.